In the year 2024, something that could potentially derail it is a liquidity problem or a slowdown in liquidity. It is not necessary for there to be a liquidity crisis. Nevertheless, it is possible that you are experiencing merely another circumstance of stagnant liquidity. For example, you have been experiencing choppy liquidity for the past 6 months, and Bitcoin has been experiencing choppy liquidity. This allows some of the consensus steam to be released, and then perhaps you have run out of money in 2025. Therefore, I'm not attempting to forecast any of those eventualities, such as if, for example, Bitcoin has dropped into the upper 30s by the end of the year, or if it has already reached 6 figures. I'm not even attempting to speculate on any of these possibilities due to the fact that it is such a volatile asset and there is a great deal of margin for error that might occur. None of those situations would surprise me. Because of this, I have felt much more comfortable producing 2-year outlooks, which is due to the fact that I truly do not know what is going to happen in 2024. However, I do feel like I have a higher conviction about what is going to happen with the combo of 2024 and 2025. If this is the case, then it is possible that all of these individuals are extremely anxious about the year 2024 and possibly what they anticipate will take place. A good example of this would be the fact that it's pushed back by 6 to 12 months. So far, I believe there are a lot of snares that are similar to that. To our knowledge, there's been no indication of distribution. You are aware that when Bitcoin experiences large bull runs, it is common for some of the older holders to begin selling into the strength of the market. It is possible that they are trying to rebalance their holdings. You know that now they can finally afford the house that they wanted but couldn't afford before, and as a result, you see part of that distribution as new buyers come in, and that process hasn't even begun yet. Perhaps they want to consume, and you know that they can finally afford the house that they wanted. Based on any kind of on-chain study that you look at, I still believe that we are very early in this structural bull run. However, I do believe that it is essential to remember that a bull run is not something that should be taken for granted. It is not necessarily something that is owed to you simply because the halvings are taking place or simply because it is currently on that cycle. I believe that it is probably still likely to happen over the next 2 years. It is essential to kind of manage your expectations and risk. In light of this, it is possible that everyone is wrong about the possibility of a cryptocurrency bull run in 2024. A recent analysis of Lyn Alden's economic prognosis consisted of dissecting the highs and lows of the cryptocurrency market, which included everything from fluctuating interest rates to a tightening balance sheet. Specifically, she investigated the complex relationship that exists between the budgetary strategy of the Federal Reserve and the consequences that it has for cryptocurrency. In addition, Alden examined the prospects for Bitcoins in 2024, taking into account the influence of spot Bitcoin ETFs and highlighting the fact that liquidity will be a significant role in determining the upward trajectory of his cryptocurrency during the subsequent bull run. As the movie draws to a close, you will have the opportunity to listen to Alden's observations regarding the most significant obstacles that Bitcoin is likely to face over the next 2 years. The main answer, I would say, is that the fiscal was larger, and so if you look at the first 3 quarters of 2022, that's when you had the full force of the tightening. So the rates were going up, the balance sheet was going down, the Federal Reserve and the Treasury and the fiscal side is not really offsetting it at all. So it was just, assets across the board were down, everything was down. The economy was decelerating by almost all metrics, but starting that kind of fourth quarter of the year, we started to get the Treasury offsetting the Fed. So to begin, they started dumping cash from their Treasury general account back into the market, which is a pro-liquidity strategy. And they continued doing that all the way up to May of this year, which is the same as May of the previous year, 2023. And then the second lever that they pulled was to begin issuing more short-term bonds than long-term bonds, which enabled them to remove capital from the reverse repo facility and reintroduce it into the market. As a result, the Treasury has taken 2 distinct types of actions that have more than compensated for the federal government's drain on liquidity. This has been beneficial for both the markets in the United States and, to a certain extent, the markets in other countries, as it has lowered the value of the dollar index. As you are aware, there is a significant amount of global debt that is denominated in dollars. Therefore, when the dollar increases in comparison to other currencies, a significant number of those businesses are put under pressure. It is not in your best interest for your income to be denominated in the weak currency while your debts represent the strong currency. Nevertheless, ever since that same point that occurred during the fourth quarter of the previous year, we witnessed the dollar index kind of drop off its highs, which then provided the world with some breathing room. This was a significant reality that was not going to continue to be connected with liquidity. In my opinion, one of the most important, it's true that everyone's attention is mostly focused on the halving and other similar matters. Naturally, all of that is important. Exchange-traded funds, AFS, are important. Halving is important. Nevertheless, halving may not necessarily be important in the months leading up to the halve. You are aware that the continued strengthening of Bitcoin is of utmost significance. Yet, there have been previous bull runs. There is a great deal of unpredictability surrounding the halving, and I would suggest that this is largely due to the fact that liquidity was the factor that had a greater impact on the timing than the halves itself. The half helps to establish higher highs and higher lows because, as you probably well know, the amount of Bitcoins that are introduced into the market and need to be absorbed is of utmost importance, particularly in a bad market. In my opinion, the real timeline, which ranges from 3 months to 3 months to 6 months to 12 months, is far more influenced by liquidity. Therefore, I believe that exchange-traded funds are going to be beneficial. You are aware that individuals are discussing whether or not they intend to sell in a news event like you are aware of this. Quite a few individuals have priced in the exchange-traded funds, and it is absolutely feasible that the first quarter may be unimpressive. One thing that I would take the under on is the fact that people keep saying, well, what if you're aware that the money does not just coming in as rapidly as people believe it does. You are aware that these pools of money, which total tens of trillions of dollars, have allocations of, for instance, 5% or 3%. It seems as though that is not going to take place anytime soon. Probably you are aware of one kind of description that I have provided, which is that it has been known for some time that if you have a gold slice in your otherwise 60-40 stock bond portfolio, it improves your risk-adjusted returns. This is due to the fact that there are periods of time when both stocks and bonds do not perform well, but gold does perform well. So, for instance, the decade of the 2000s or the decade of the 1970s, there are decades in which just that slice helps a lot, and yet it is still underallocated in comparison to what you would think from looking at those numbers today. Bitcoin is like a rocket fuel version of it. You should know that if you take a look at that, do you have any knowledge about the Nakamoto portfolio or any other resources that demonstrate the addition of even a tiny portion of Bitcoin to your portfolio can have a remarkable impact on the results you receive when risk is taken into account? As you should be aware, you would imagine that it would gain popularity more quickly. Some traditional pools of capital, on the other hand, just take a very long period to make judgments regarding investments. Generally speaking, when someone you know owns a small business in which the owner only has a majority share, they're able to make judgments without much delay. For instance, there are some publicly traded organizations in which the founder continues to make a significant number of decisions, such as MicroStrategy. Due to the fact that they possess this power, they are able to make decisions that are more swift and decisive, in contrast to companies that have a decision-making process that is much more dispersed. When it comes to actually making real adjustments to a portfolio strategy, it can take a very long time. As a result, I believe that exchange-traded funds, ETFs, are going to be beneficial, albeit possibly to a lesser extent than what people anticipate right